Hey guys, welcome into the Flow Zone. My name is Renko and I help traders develop a better understanding of the markets and make better trading decisions. Let's talk about developing value and the tools we use to spot that, the volume profile and the VWAP, and more importantly, how they work together. But first, thank you guys for the 1000 subscribers. I am extremely grateful. Thank you for your likes, your comments, your shares. You guys make it worth my time. The concept we're diving into today are core to the market structure strategies that we use to trade daily in our Discord community. Whether you're just starting out or looking to elevate your skills, we've got both free and premium options to fit your needs. Check out the link in the description to join us. So without further ado, let's dive in. So let us first explain some of the basics of auction market theory, and that is price versus value. So as we know, price is the amount of money someone is willing to pay for something at any given time, and value is the perceived worth or utility of that item over time, often determined by factors like demand and how it compares to alternatives. So let's put this up with an example like an iPhone. So when a new iPhone model is released, Apple will set its price at $1,200, for example. So at launch, the iPhone's perceived value is high due to the new features, the brand prestige, the hype surrounding it, and because it's an Apple. The acceptance we are looking for is if a significant people are willing to buy the iPhone at this price, it indicates market acceptance. The high sales volume suggests that consumers believe the price reflects the iPhone's value. As time will pass, the iPhone's price will also decrease, let's say, to $900. So as the iPhone's value might decrease slightly, it's no longer the latest model, but it still has utility for many users. So if the iPhone continues to sell at this reduced price, it indicates continued acceptance at this price level, suggesting that the market still perceives it as good value. Eventually, Apple might further reduce the price to, let's say, $600 to offer like significant discounts. At this stage, the value might still be seen as reasonable, especially for customers who prioritize the price over having the latest technology. If the market perceives that the iPhone's features are outdated or if the competition offers better alternatives at the same or even lower price, we see rejections. This is evident if sales decline sharply despite the lower price. So what does acceptance and rejection mean in trading terms? Acceptance occurs when the price of an asset, like the iPhone in our example, aligns with the believed value, and there is a significant trading volume at the price levels. That shows that buyers and sellers agree on that price level, and it's likely that this price will act stable for some time. Rejection happens when the market or customers in our example do not perceive the price to be reflective of the value. If the iPhone drops too low and consumers still aren't interested, the market is rejecting that price level. In trading, this would be similar to seeing a price level that fails to attract buyers or sellers, causing the price to move away from that level. Now the question is, how can we apply this in trading? So imagine the iPhone is a price level on a chart, like let's say 1000. The market spends a lot of time and volume trading at that price. This is where we have acceptance. The market views it as a fair value, similar to how customers view the iPhone's price. If the price drops to $800, but there is little trading volume, because traders think it should be worth more, the price might be quickly rejected and the price can rise back up. Alternatively, the price can go up to like $1,200. Trailing volume drops off because traders believe it's too expensive. The market rejects this level and price can fall back down into the original value. Now let's say we see this on a volume profile. So a volume profile should be distributed like this. We will have our POC right here in the middle, where the sales are obviously booming. This will be the 70% range, and anything over that will be the rejection of prices. So overvalued or undervalued price. Let's jump into a volume profile. So here we have an ES volume profile daily chart. As you can see, we are coming from here. We are building value. If you are unsure what these zones are, these are value areas. We've talked about this in other videos. Just to be quick, a value area is 68% of the most traded volume on a bell curve, which is perceived as value. Value areas have got a high, a low, and a POC, which is the point of control, which is the most traded volume at price. But you should know that. So let's say our iPhone, let's not put numbers on it, but let's say the value of our iPhone is here. The price could go a little bit cheaper. We don't accept these prices. We go up and we search new value in these areas. But this area is found too expensive. So we drop back down, search for value in this area. Too expensive, value drops down into this area. Consumers still think it is too expensive, so we drop back down in this area and we drop here. People think this is mighty cheap, start buying up iPhones, so the price will go up and find some value for a couple of days in the same zone, and as we find value, prices will slowly go back up. This is a very simple deconstruction of how price and value works. We talked about volume profile. Let us talk about how price moves in this volume profile. So we have a value established here. We are trying to stay in this value, but obviously sellers want lower value. So we go looking for lower value here. These buyers do not agree with the lower value and we go up seeking a higher value. Let's just for once put this value zone in a drawing. So we are looking for this higher value. We try to buy even higher. Sellers do not want this very high prices and we're going down. Next day we're looking for value much lower. We keep going down until one day we reach the bottom where we perceive this value as being extremely cheap. We move up again and we start to make some value in this range. So as we can see, the value in this range will keep going higher, which means we can expect price to go higher as well, following the value of our asset. And in just a few days, our previously high perceived value is now our new established value. Now, how can we see this with a VWAP? Let's first talk about the VWAP. VWAP is a powerful indicator of value. When price hovers around VWAP or its standard deviations, it tells that the market is in agreement. Buyers and sellers are transacting at this level because they both see it as fair value. And here's where it gets interesting. When price is moving away from VWAP between these standard deviations, we are building new value areas around this. As you can see, we are developing a new value area from this area, which is perceived here, to this area, as we can see here. If the price breaks away from VWAP, but it consolidates near a new level, like the second standard deviations, it often aligns with a high volume node, as we can see right here, because there is a lot of volume traded in this standard deviation. This level becomes a new POC or point of control. The market is accepting this price as new value area. Traders agree that this is fair price now, and you'll often see the market hang around at this level. If, for instance, we start trading at VWAP, we will break higher. We start seeking acceptance in this level, but we can hold it, go back to VWAP. We will start seeking acceptance in this level. And if it gets rejected, we will start seeking acceptance in this level. And this is the magic of VWAP and its standard deviations. Rejection happens when price moves away from the VWAP or its standard deviations and can sustain itself at these new levels. You'll see market test a level, but if the volume doesn't back it up, the price snaps back up to VWAP. This is the market saying, no thanks, the price doesn't represent value, and we will reject it. Let's see this in an example. So as you can see, we opened up right here. This is Asia. We let VWAP do its work, and pretty soon we can see a consolidation. So we are building up value in this second deviation area, represented by this volume node. Once we try to break higher, we try to find acceptance in this third deviation area, but we get a rejection. Price gets rejected once again into the first area. We try to find acceptance back into this value zone. Price gets rejected again, and we try to get back to the place where we found value in the first place, being this first and second standard deviation. So this way you can form your structural plan. You can say, okay, for example, I want to start taking a trade when our perceived value, in this case between first and second standard deviation, will be back in acceptance. So every time we reject it, we wait until price comes back into our area and we take the trades from there. Like if we pull back underneath and we start getting back to VWAP, retesting that VWAP, and prices get accepted here, we can get an acceptance long trade. Here we can see much better our value areas. So how do we use this in trading is all about understanding where value is and how the market is reacting to value. If you see price holding above VWAP or developing a new value area higher up, you might look for long opportunities like this one, especially if the volume profile shows strong acceptance on these levels. So let's look at this as a little example. I marked out the value area high and the value area low. So as price is developing, looking for new value, you can clearly see we stay inside of VWAP standard deviation 1 and 2, which means we are finding value within this zone in the uptrend. Once we break through our established value, we try to break through, get rejected and move back up. We try to find acceptance back into this zone, but we get rejected. Find a little balance here, try again to find acceptance within our previously established zone, but the market decides to take value lower between VWAP and the first standard deviation. So how does that look on our volume profile? The moment that we try to find a new value area, we are establishing our new developing value area right here at this top. So to find the value areas, you actually just have to follow the VWAP and how it behaves in accordance with our volume profile. So by using VWAP and volume profile together, you get a clear picture of where the market sees value and how likely it is to accept or reject new price levels. This gives you an edge in anticipating market moves and making more informed trading decisions. One more example we can see with a weekly volume profile and a weekly VWAP, which is even easier to follow. You see we have an established value here. We test below that value, keeping the second standard deviation as support, but we don't find acceptance here, so the market is going to try to find acceptance in our previously established value area, which it will find. We're going to try to burst out. We get reject right below this value area within VWAP. Once we cross VWAP, we have a good long setup right here, targeting the other side of our value area or previous POC. And once these prices get rejected, we fall down, we go look for new value. So the market bounces, we make a new value area right here underneath our previous value area. After which the next week we get back into this value area looking for higher prices. Alright traders, now you know how VWAP works together with volume profile in order to establish and find value, where it's accepting prices and where it could possibly say, nope, not today. Use this knowledge to refine your entries and exits or to prepare for the day, using it in conjunction with market structure to find new and better levels. And you'll start seeing better results in your trades as well. If you found this video helpful, please click the like button, leave a comment down below with your thoughts or questions, and don't forget to subscribe for more in-depth trading strategies and insights. Also, feel free to check out the Discord. Until next time, stay sharp, trade smart.